Get Jesse Myers with a background of excellence there.
And at the in-laws this week, and the boomers did well.
The boomers did very well. Very well. This is a background that really exudes the excellence we're going for with this show. We got a big week. Big news week this week, gentlemen. I'm sure there's a lot of institutional investors and people thinking about getting into Bitcoin who are a bit scared by everything going on right now. And that's why we do this show. And this week, we're joined by Tyler Campbell from Unchained. Almost said Capital. It's just Unchained now.
Yes. Yeah, just Unchained. Thank you for having me on. Excited to talk about the slow news week. Nothing going on. So,
well, nothing
to dive into it.
There's a lot going on, Tyler. Don't sell it short. We've got a lot to get through. We've actually got one of your threads that you wrote a couple weeks ago about the inability of Silicon Valley to grock Bitcoin that we're going to talk about. But before we jump into the topics of the week and the chaos in the markets, particularly the crypto markets right now, tell us a little bit about yourself, Tyler. What do you do at Unchained? What is Unchained doing? And I think high level, how are you viewing the events of this week from an Unchained perspective?
Yeah, absolutely. So Tyler Campbell, I'm a VP of concierge here at Unchained. So I do lead our concierge team, the team of folks that I believe, as Marty has said in the past on TFTC, will completely take care of you. Sometimes we'll wipe your butt when it comes to setting up a multi-sig vault. But really, our team is purpose-built to make people feel comfortable and confident in their Bitcoin security. So taking folks who, either if it's their first time holding Bitcoin with their own keys, or if they've been using a hardware wallet for some years but want to make the move to multi-sig, we really walk people through every step of the way. That comes with a lot of education as well. So been doing it for 2 years now, officially 2 years yesterday. Loved every minute of it so far. Moved down from Minneapolis, Minnesota to Austin, Texas, to the Bitcoin capital of the world. And yeah, haven't looked back. Shout out to the Minneapolis Bitcoin crew though. Yeah, it's like from our perspective, during times like this where there's kind of these shocks to the market, and we've seen it over the past 48 months, right, going all the way back to like the BlockFi, the FTX, like there's things that happen. And during these times of chaos, it's really there's like a big spotlight shown on why holding your own keys is important, right? The not your keys, not your coins isn't just a mantra, but it's incredibly, incredibly important. So our phones are ringing off the hook, and we're excited to help out.
Hell yeah.
Yeah, Tyler, was excited to have Tyler join us this week, being so close to the action with individuals when these, shocks to the system happen. Tyler and I previously working together, seeing the crazy inflows when you're doing things the right way. There's a knowledge asymmetry, and it starts to go out into the market as you wake up and find out your exchange doesn't let you take possession. You may not have any Bitcoin actually sitting there. They may have a hole. And so I knew Tyler had probably been close to a lot of that, as well as being able to really talk through. And Marty mentioned he had a really interesting thread about Silicon Valley and getting, Bitcoin, and maybe in the last that I think private keys tie into that. Because the idea of getting crypto, it's like, oh, it's fine. It's just another asset. It's on exchange. It's perfect, fine. But the reality is, if you're really going to understand what's happening here, you want to take possession of those keys. You want to figure out your custody model to have it more resilient than what a Robinhood would look like when you buy a stock or bond, and it just sits there. It's very different. And like we like to say, there's no bailouts in Bitcoin. So if you ever, you can't print more Bitcoin if they're lost. And that's really the underlying philosophy behind it all.
Yeah. And like using Silicon Valley, viewing crypto as these assets that sit on exchanges, they can trade like they do with traditional stocks and bonds and other financial assets. I think this week is particularly interesting because that is where all the focus is on two particular exchanges where a lot of these assets sit, Binance and Coinbase. The SEC came out with complaints against both, not exactly the same in each case. With Binance, I think the complaint is about offering unregistered securities, commingling funds, and then spoof trading as well has been levied against Binance. And then Coinbase, I think the SEC is really honed in on their staking service, particularly, and defining that as what they would deem to be a security. And so this is something that has been looming over the space, if you will. And it's important to say, like, the space, quote unquote, because here, I believe every individual on this show right now believes that there is a clean distinction between Bitcoin and crypto. And there's been a massive narrative battle that's been going on for the better part of a decade now within the space. Bitcoiners who are saying, hey, Bitcoin is where the signal is. Everything else is somewhat of an infinity scam, and the exchanges handling these assets and offering them to retail investors are, number one, I would argue, doing something a bit immoral because, in my opinion, and I think objectively, what history has shown us throughout the last decade is a lot of these assets are simply pump and dump tokens that offer insiders quick exits. They're very liquid, very easy to dump on retail. And then number two, which is where things get a bit heated, and a lot of the contention on Twitter and online this week has stemmed from, is the fact that Bitcoiners have been warning these exchanges, particularly, like, hey, you're probably offering unregistered securities to your customers, and at some point down the road, the regulators are going to bring the hammer down, and that has happened this week for Binance and Coinbase particularly. But this is a very big entangled yarn ball with a lot of nuance, especially when you consider the fact that a lot of Bitcoiners lead towards a free market view of the world, where if people want to buy and sell tokens using their free will, they should be able to do that. But you have to really separate that idea, which I'm a big believer in, is if people want to go buy these assets and speculate on them, they should be able to do that. But you have to separate that from the fact that we do live in a country with regulations, with laws. I may not like the laws, but you can easily identify them and know they exist and point to the exchanges and say, hey, the SEC is probably going to come after you one day. They've been posturing like this for the better part of the decade, and it's finally happened, and it's created this massive contention in the space that Bitcoiners are getting dragged into. That was a long diatribe to sort of set the stage. Jesse, we'll throw it to you. What are your thoughts on the SEC's enforcement actions on Binance and Coinbase this week?
Yeah, so what you were just articulating made me think about how, like, why do these rules exist? Like, why do we have the Howey test? And is there really any merit to, having a classification of what's allowed when you're offering a security, and then making a distinction of what's not allowed? And the reality is, like, without these distinctions, you end up with snake oil salesmen. You end up with grifters, promising the world and rugging everybody that is foolish enough to believe them. And you can sort of imagine this happening in 1800s America. People promising things that are not real, and offering stocks, and obviously not registering because there was nothing to register at that point. And that's what they're protecting against. They're trying to make it so that you can't just go trick grandma and fool her into investing in the next Google when really you're not going to do anything. So that's why we have these securities laws. And obviously you could say, like, that maybe they do too much, or maybe they're too restrictive. But the spirit of it is to, like, prevent grifting, to prevent scamming, really, in its purest sense. And that's what the Howey test is all about. And so if you're running afoul of the Howey test, which is to say you're passing the Howey test, because the Howey test is several tenets that if you check one of those boxes, then you pass it because you are actually a security rather than not a security. And lo and behold, all of these crypto assets out there are running afoul. They're passing the Howey test. And that means that they are really no different from some scammer in the 1800s promising, I've drilled oil wells in Texas, and you can invest now and be a millionaire. When actually there was nothing, and they were just scamming. Turns out a century later that crypto assets are spiritually similar to that kind of situation. And that's obviously problematic for the good of American citizens, and not acceptable as a result of that. So, I think it's helpful to take it back to like, what are these rules trying to protect against? And then recognize that like, if you are triggering one of these classifications, then there, it might be problematic for the good of America, for the good of American citizens, because you can't promise the world and take grandma's money, and we don't want to live in a society like that. And yes, of course, there's ways in which it overextends or goes too far, but the spirit of it is important to remember here. And like, when you think about crypto as the latest snake oil salesman frontier, I think that's helpful for me, at least, to put it into perspective about like, what do we need to protect against as a society, as a civilization. And thankfully, in my opinion, the SEC is finally drawing that line.
Yeah. Well, that brings into question something else too, which is those in the crypto industry, Coinbase, Binance, and others are basically coming out and say, hey, we've been asking for guidelines. We've been asking you, SEC, we've been knocking on your door, we've been reaching out saying, hey, what do we need to do to be within compliance with the SEC to make sure that we're above board and doing everything by the book in your eyes? And they would make the argument that the SEC hasn't really put a good foot forward in terms of providing that guidance that these exchanges deem as necessary to operate within the letter of the law. So they're making the case that due to the lack of guidance from the SEC, they've been sort of forced into this position where they're not in compliance. And so that they would posture that they've been sitting in limbo, begging for guidelines and rules that haven't been given to them. Is there any merit to this argument, in your opinion, Michael?
I think there is. I think that there's like an underlying fundamental issue with like the regulations, the bureaucracy, and the politicians. They all kind of like intertwine together. And it's actually, I was thinking about it. At least for me, it's the most fascinating part about all of this is how they can't get their shit together, basically, on like aligning on. We know that SEC and the CFTC is basically at arms to figure out who can govern what and what is a commodity, what's a security. And we know Gensler in 19, at least Binance's lawyers are saying that Gensler, I think, was on the docket or requested, or there was some discussion about becoming an advisor for Binance. And we know, to take the extent of Silicon Valley back into this or bring them back in is whether it's A16Z or we all remember that episode with the All-In Group and the getting in early on the pre-sale of Solana and dumping, that at the upper echelons of the like economic stack, they figured out a way, because venture already in itself has been like this bucket or this hole of capital that's gone from sovereigns to effectively venture firms, and then to retail, and this continue up the stack of marking up prices and where's the exit liquidity coming from. And that version of the world basically found it in crypto, and they found a way to basically mainline that old product into this new crypto fast, within 12 to 18 months, get early pre-sale, sell the token, dump on retail, get your dollars, give it back to LP, rinse and repeat. And part of that felt like that gave the cover for the past few years while the market and everything's up and to the right to be able to, whatever's done, whether it's, handshake deals or whatever, to get the politicians, the regulators, everybody looking the other way. But as we know, when the tide goes out, we find out who's swimming naked. And so while we're finding out exchanges are insolvent and people are bankrupt and all the things going on from the mechanical sense of an exchange, there's also on the regulator side and who's getting paid and who's getting, their hands greased and what's happening there. And so it's kind of just, it's more of a fundamental issue with the US and everybody not necessarily being on the same page on what's actually happening here, and everybody wanting their own stake of how do they govern it, who is regulated, who's taxed. And so I think there's two parts. There's one, it's very difficult to build in this space, and that's where we come at it from the angle of Bitcoin only, a commodity, and all the things that go along with it. But then I think there's also just a macro structure of American politics and making it very difficult for what is the individual that's looking to build a productive business or asset, and the amount of red tape that has to come through because of all the other things that go along, similar to this. Gensler looking like the white knight, but then we find out that he was trying to, work with Binance all the way back to 2019 and was sending them, I think, he went, I think, I want to say the Senate, he went somewhere in DC and basically gave Binance or CZ the heads up of the whatever was explained to them before he even went. I think it was to audit it or say, get your feedback before he went. So there's a lot of that. And I think it all kind of intertwines to your point that there is some fundamental truth to, they haven't been clear and it's created problems. But at the same time, I think that all of these groups would have claimed something to just be able to continue to dump what's effectively their bags on retail market.
Yeah. In my opinion, everybody's wrong here. The SEC, like you mentioned, the SEC, the CFTC have been fighting over who gets to regulate all this stuff. And they've been opaque and a bit slow to move, probably on purpose, to get these exchanges and these token teams in this precarious position where it looks like the SEC's hand is forced to come in and regulate, but they've sort of let this go on for so long without providing clarity that they are to blame to a certain extent. And then on the other side, with the exchanges and the token offerings, I think that's what gets Bitcoiners the most mad, because like I said earlier, Bitcoiners do believe in free markets, or I'm not going to speak for all Bitcoiners, but there's a large subset of Bitcoiners who believe in free markets. And if people want to make these decisions to speculate on these assets, they should be able to do so. But with that being said, there's also a moral argument on the other side. If you're going to offer these tokens, if you're going to launch these tokens, if you're going to put them on your exchange, there's somewhat of a moral burden that comes with that as well. Because as we know on this show, you don't really need a blockchain for anything. In fact, a blockchain, I would make the argument, only works for money. And if you have Bitcoin working as well as it has for the last 14 and a half years, there simply is no other need for a blockchain. And that's the thing I think frustrates a lot of Bitcoiners, is a lot of these tokens, again, are affinity scams that are selling the world, but really have no fundamental reason to exist. They are not necessary to perform the function that they're marketing, that they're performing. We've had many waves of these assets, whether it be back in 2013, 2014, the early proof of stake coins, the multi-script algo coins that came out. And then in 2017, you had the ICOs that came out. Every company needed a token associated with it and a blockchain, predominantly running on Ethereum. And then you get to 2020, 2021, you had DeFi, you had the NFT boom. And this is all culminated in this enforcement action that we're seeing this week from the SEC. But at the end of the day, these tokens, I would argue, do not need to exist. They do not provide the utility they say they're providing. They are inherently centralized due to their issuance and the concentration of supply that exists in a small group of hands and the ability to change these protocols on a whim. And that's like the weird sort of conflict that Bitcoiners feel is, yes, they believe in free markets, but they also want to call out scammers when they see them. And that's, I think, what a lot of Bitcoiners view the crypto world as, is a bunch of scammers just trying to grift to get quick exit liquidity so that they can get rich and wipe their hands clean, because that's what history has shown us. There's very few tokens outside of Bitcoin that have really stuck around and actually operated for longer than 5 or 6 years. Ethereum's probably the only one, but even that comes with massive problems. They're changing their narrative on the go. Now to flip it to Tyler, is there anything you have to add to this?
No, just to go off your point, it's like that's the Bitcoin's marketing department, right? Is kind of moving in the shadows, because you take people who, let's say, Gen X husband and wife couple from Virginia, right? And they got into the 2017 crypto bull run and were buying every token that would go up. But then over time, it's these news headlines that are coming out about everything but Bitcoin. It's these ticker symbols in the litigation that are everything but BTC. It is Ethereum roadmaps containing technobabble that these people just don't understand. And so in a long enough time horizon, I do think things converge onto Bitcoin. It's like all of this stuff, regardless of the SEC or the CFTC, we're going to win on a long enough time scale, because these projects are shooting themselves in the foot. And I think that was always going to be the situation. I'd love to rely on people doing their own research and finding out that a certain token is really just a landing page with, a 20-year-old CEO who stands to gain a bunch, but people just don't take that dive. So I think part of the answer is just going to be, a slow bleed and a time scale necessary for people to find Bitcoin.
Yeah, that's actually one of the things that I, when I was referencing about the battle in the CFTC and SEC, there's the last component that I think adds to the underlying muckiness of it, is the politicians not wanting to legitimize it. And so there's a recent bill that came out between McHenry from Montana, Thompson Hill, that the net of it is that the SEC would oversee anything that would be deemed a security, and they would have obvious tests for that and requirements on the digital asset side, and then proof of work / BTC on the CFTC, and give a clear delineation. But there's a direct quote from there that says, one of them was like, "Let it burn," and the other one, it's all bullshit from the Montana Democratic Senator John Tester, with the idea that they do not want to provide clarity or a framework for individuals, because you can imagine a world like that. To Tyler's point, if you had a clear delineation, you had an understanding that one is a commodity, one cannot be created by individuals, manipulated, and all the things that go along with it. It kind of takes some of that murkiness out of understanding what you're buying, or at least what you're not buying. So I think that's just important component to recognize as we go and we have these discussions, and kind of ties into some of the stuff we plan to talk about with Tyler's thread and Silicon Valley. It's like they don't fundamentally understand what's happening, and because of that, it's maybe not their fault. They just don't know the difference between a token that's created tomorrow and Bitcoin, because they're looking at it as a digital currency or a digital asset.
Yeah, I'd love to build on that too, of like coming back to the Howey test of, maybe I have a little bit more appreciation for the spirit of the Howey test than the average Bitcoin maximalist, because that was from a different era of that was from 1946, and the Howey test, it's kind of incredible that the Howey test catches crypto assets in the wrong, and for that matter, that Bitcoin was quite clearly deliberately designed to not run afoul of the Howey test, because let's talk about what the Howey test tenets are, right? So it's an investment of money with an expectation of profits, and it's an investment of money in a common enterprise, and profit comes from the efforts of a promoter or third party. So, when you think about Ethereum, you've got a leadership team, a core group of developers that have a pre-mine, and their efforts are going to generate, a brighter future for Ethereum, and drive the price up. And that there's video of Vitalik talking about how their efforts are going to cause the price of Ethereum to go up over time. So that's a security right there. And even though the Howey test was made in 1946, obviously before the internet, before any of this was possible or conceivable, it was designed in an era when, frankly, I think that lawmakers were acting in the honest interest of citizens a little bit more than they are now. And I think it was a well-designed test to catch shit like Ethereum, while allowing for something like Bitcoin, which, when you go through those 4 tenets, there is no expectation of profit. And I think Satoshi quite deliberately stepped back, in part because, people weren't profiting off of his efforts or, any core group's efforts. Anybody who had any kind of pre-mine, there was no pre-mine. You could make the argument that Satoshi was there and had an advantage to mine from day one because he knew about it, but that's as strong of an argument as you can make. And then he steps back to ensure that there is no expectation of profit based off of his efforts. And so the contrast between Ethereum, as representing all of altcoins, every other cryptocurrency besides Bitcoin, basically, and Bitcoin is completely stark in terms of the Howey test. And so in that sense, and we've gotten increasing clarity from regulators that Bitcoin is a commodity and nobody's coming after Bitcoin. We have these quotes from Gary Gensler and the head of the CFTC saying that Bitcoin is a commodity, and as for everything else, Gary Gensler makes the case that everything else is a security. CFTC head says nobody's coming after Bitcoin. So Bitcoin is a commodity, but everything else out there is a security. So long as they have a team working on it, trying to catch up to their competitors, which is everybody, because everybody's behind from Bitcoin. Everybody's trying to spin up a narrative, trying to outcompete based on technological innovation, while not realizing that this is actually about money and immutability, not about innovation and change. And so by that very nature, since you have a team trying to work on something and trying to drive the price of a certain coin up, and their war chest, their bankroll is rooted in a pre-mine of their own coin, that is a security. And it's crystal clear to Bitcoiners because we've spent time thinking about this. But most people come into crypto and think, okay, so Bitcoin's around and it's been allowed, and all these other things are around and they've been allowed, so I guess they're all good. And Coinbase offers them, and Coinbase has a Super Bowl commercial, so how risky could it really be? This is all on the up and up. And people aren't realizing that this is a bunch of entrepreneurs or grifters or scammers trying to create a currency that they control and sell it to people. And there's a lot of money to be made there. So people have acted first and are asking questions second. And that's how you grow a big company like Coinbase or Binance in the matter of a few years, by creating this casino for people to get rich and trade. And most people get wrecked. On the margin, it is a net destructive endeavor for individual wealth, whereas Bitcoin is designed to be different, because all you have to do is hold for 4 years, and your purchasing power reliably increases. And so for everybody in Bitcoin, it's been quite clear for as long as they've spent time thinking about why is Bitcoin different from the rest of these things. And for most of the world, they've been sleepwalking into this trap that they didn't realize had not yet been sorted out. And I think we're entering that era of a reckoning for unlicensed securities in the digital asset space, and it's overdue. You can call it statist, or you can say that the SEC doesn't have a role in anything and we should have purely free markets. But I think the spirit of the Howey test is in the interest of preserving grandma's dignity, rather than allowing her to get scammed out of all her money. And I think that hammer is finally coming down now. And you could easily make the case that it's silly for us to be rooting on the state here, but I think it's rooting on the enforcement of a level playing field, and putting an end to the exploitation of the rules as they are. So it's time, and I think it's finally here.
Yeah, I trend more towards like the free market stuff. Like I don't like the SEC. Yeah. I don't like the government. I don't think they're efficient. I don't think they're.
And I should add that the spirit of the 1946 stuff, I think it makes sense. And over the decades, we've crept towards an increasingly overreaching version of the SEC and regulators in general. So, that has become more of a problem versus the original intent of it. And that's the nature of the state, right? But I see the purity of it, and I appreciate it for that, but it has its major problems in terms of enforcement.
Yeah. And I think there's a good opportunity here to provide some backstory on how Binance and Coinbase, the two exchanges in question this week, got to where they are. Two very different stories. We'll start with Coinbase because it's older. Coinbase started out as one of the first consumer exchanges, consumer apps where you could easily go and buy and sell Bitcoin. It was the first place I bought Bitcoin, and it was an incredible product in the beginning when it was simply you could buy and sell Bitcoin. It was the best way to get onboarded onto Bitcoin. And at that point, back then, 2013, 2014, Brian Armstrong seemed to have really gotten Bitcoin. He postured that Bitcoin would scale via sidechains, that altcoins, there's a tweet back in 2015 or 2016 where he said altcoins are affinity scams. We should be focused on scaling Bitcoin via sidechains in other layers. But somewhere along the way, I believe the pressures from the venture capitalist backing Coinbase, things got corrupted, and they saw, I would call, the siren calls of the fees and the profits that come from enabling the trading of altcoins, and they went down that road where they essentially became an altcoin casino. Obviously, Coinbase IPO'd a few years ago, and has been somewhat of an above-the-board operation since its inception back in 2012. It's VC backed, came up in Silicon Valley. They really a example of American innovation around Bitcoin, in a company that came up and did things above board to a certain extent comparatively. When I say comparatively, compared to Binance, where Binance essentially filled the hole that was created when Bittrex, I believe, or Poloniex, which were two altcoin exchanges back in 2016, 2017, they were forced to add KYC, AML restrictions. And so in the Wild West of altcoin trading back in the 2013 to 2017 era, the trend was that you would have an altcoin exchange pop up and they would allow you to trade without any KYC or AML compliance. You would simply put in an email address and you would be able to load your account up with Bitcoin and then trade into altcoins without giving the exchange any of your personal information. And the way it worked was a new exchange with no KYC AML will pop up. It would start out with relatively low liquidity and low traction, but eventually everybody would flood to that exchange. And then once they got to a certain point of popularity, the regulators, they would draw the ire of regulators. Then the regulators would say, hey, like, you need to employ KYC AML compliance, start taking information on your customers so we can track them. And as soon as that would happen, people would leave that exchange, another would pop up. And so that's how Binance started. When Bittrex, I believe, or Poloniex, one of those two, thrust KYC AML on their users, Binance sort of filled that void and came up as the exchange with no KYC AML. You can come trade here without giving your personal information to us. Eventually, they've reached massive scale. They're one of the biggest exchanges, probably the largest exchange in the world. They have since added KYC AML compliance, but I think they are the exchange that bucked the trend of sort of seeding the no KYC AML exchanges in their wake. I think it got to a certain point in 2017 where regulators were all over it, and I think Binance was the last one through the door that was able to incept themselves with no KYC AML. And they've since grown to a massive exchange, and they're extremely popular all around the world. And so that's how we got to where we are with these two particular exchanges. Coinbase was the Silicon Valley consumer-facing app here in the U.S. that blew up and made it very easy, and then probably got corrupted by the lure of profits from the fees that would come from allowing users to trade shitcoins. And then Binance sort of rose from the ashes of Poloniex and Bittrex, forcing KYC AML on their users.
I do think there's a fascinating thought on the they're very similar if you think about like what we're talking about, offering securities and bucket shops and all this stuff. But I fundamentally think they're different businesses from a like efficiency standpoint and the entrepreneur. Like I would say that CZ's a 100x entrepreneur than Brian, and from the number of employees, the amount of revenue and net profits, all the way down to, I'm pretty confident, especially in the Bitcoin space, people understand CZ's a capitalist, and he knew exactly what he was doing, and he was playing within a world that was gray and it wasn't right. People lost money. But if we go to the other side, where I like chalk the Coinbases and BlockFis of the world, I fundamentally don't think they have any idea on what they're doing, two, where the space or what is actually happening. And you can go back to, Brian being at Airbnb and this idea of growth at all costs and top line revenue and what does that look like. And so that thought of, we need to add tokens and we need to, spread ourselves thin. And you think about, their market cap compared to the number of employees there. It looks very similar to an Uber that is just an unprofitable business. And you think about it, how insane that could be to be an unprofitable business, to be the first exchange, the largest. And all you had to do, you could print money. And for some reason they do not. And then you go over to CZ and you watch and see what they did. And like you mentioned, rise from the ashes and produce this, what was the number, like 8 billion, I think that was like rumored to be moving around. And like, I think it was over $1 billion in like net profit in 20, maybe even higher than that. But the core idea is that was with like, I want to say 500 or 1,000 core full-time employees. So it's just an interesting dynamic on, as you think about the entrepreneurs building this space as well. BlockFi and Coinbase feel very different than Binance and just how their approach to this whole market.
Yeah, well, Binance has essentially employed the pirate mentality. They're like a pirate ship of a company, and as the SEC levied in their complaint, like Binance has many offices all throughout the world. I think they're domiciled officially in Singapore, and so they do operate in this gray area. And within that gray area, it's hard to confirm, but people have been speculating that they've been doing pretty questionably or dubious things, whether it be wash trading. They have their own token, BNB, and there's a lot of speculation that they're pumping the volumes to that to make it look like there's more activity going on there than there actually is. And so within that gray area, they're certainly using the levers they have at their disposal to sort of pump metrics and pump markets and drive liquidity. It's a lot of speculation, but I think it's speculation that is pointing in the right direction towards some signal there.
And it's a little more than speculation too, because there appears to be like quite a shell company structure with Binance, where CZ wholly controls some subsidiary companies that are trading on Binance, and like it's really reminiscent of FTX and Alameda, and the connection between those two entities, where SBF was a 90% owner of Alameda, and they were using FTX with unfair advantage in terms of not having liquidation rules, and also seeing order flow real time in order to trade against FTX's customers. The same thing appears to be happening with Binance at the direction of CZ, the CEO. So that really is kind of pirate marauding, buccaneering, and taking from customers, which is how you grow a very successsul company like that in such a short amount of time in this gray area of what's allowed and what's not. But yeah, the level of sketchiness between Binance and Coinbase is pretty stark. Coinbase appears to have really just been offering products that the SEC is deeming security, or are deeming securities. And that's a long list of pretty much everything that's not Bitcoin. Whereas CZ has been engaging in Sam Bankman-Fried style sketchiness. It appears that is speculation at this point, but yeah, they are in a different world.
I mean, I would push back a little on one, to be clear, they're all like shitheads and they're all taking a bunch of people's money.
Yeah.
And they're nobody's getting wrong. I'm more of like targeting it as far as like the level of sophistication from a pure like entrepreneurial / Marty mentioned pirates, and like pirate is generally looked at as a bad thing. And I would make the claim or thesis that in the future world, more people are going to look like the CZ model, and not to say the sketchiness, more of being everywhere and nowhere at once, being able to leverage at scale growth and number of individuals. You think about Coinbase having the Stanford or whoever, person coming from their school, and they're paying them X amount of dollars to sit there. I think it was rumored their chief product officer got paid $50 million. Like that was nowhere near how CZ scaled. On the other side of that, it's the little known secret that all these exchanges all know that they're each wash trading, or some are wash trading to keep the volume on others. It's very similar to, if you've ever heard of the rumors of like Tether, even when they didn't have it fully collateralized, it's in everybody's best interest to pretend like it is fully collateralized, because all of these exchanges, that's like their in and out mechanism. And so even if it's at like 90 cents on the dollar, it's in nobody's best interest to bring that up. And so I think like for sure, it's the CZ versus FTX is starkly different, because they didn't have any money. Binance is still processing withdrawals. The trading against, I think that is, again, going back to them being shitheads, and this is just like how they made profits. But I don't think like Coinbase, we know the Charlie Lee Litecoin, rug pull that happened in, what was that, 18? And then we know, whether it's like OpenSea or these other, I think OpenSea, the guys went to jail, but I think it even came out with Coinbase that before they listed, they can show there was reports run on the pump and the token. So like, I don't again, they're all shits, but it's just like Coinbase is in my mind no better than Binance. And to my mind, they're actually worse, because they just like pretended to pay off the politicians, where you had this other guy just say like, F it, I'm going to use the tools and things that I can do. And I'm not going to like bend the knee. And we all knew this day was coming. Matt talks about it all the time. It's like, CZ's just running around out there. And so.
Yeah, I would agree with that, because it's also really prevalent in the marketing for these two firms, right? You go to like Coinbase's website, and it's their tagline right now. It's the future of money is here. We're the most trusted place for people to buy and sell and manage crypto. They're like Google meta tags that are, if you Google Coinbase, it's like buy crypto with trust, right? So they're kind of like layering this this veneer of almost masquerading as this really trustful institution and not as basically a crypto casino. So at least, again, to Michael's point, like they're all shitheads, but at least Binance appears to be a little bit more, and I don't want to use this word to the full extent of what it means, but a little bit more honest with what they're trying to do. It's you go to Binance and it's trade like a pro. It's like, all right, well, at least you're telling us what you're offering instead of putting on this mask of trust.
Yeah, and one thing on the like max side of that, and this is something I don't know if we've talked about, and it wasn't really apparent, was Gemini. That was like the epitome of what was the slogan, like institutional or like regulate us hard or whatever it was. But they have a
crypto needs
advisor.
rules.
Yeah, crypto needs rules. In the Winklevi, and this is again ties into, I don't know if we want to get into on this pod, but I thought it was very like awesome framing that Balaji had with Marty on red, blue, and gray. Because I've had that without having it heard in my mind. And when you look at an individual like red, blue, gray, and I would say CZ gray, Brian blue, Max blue, blue with the check. Sorry, Marty. Just like complete blue. And the idea is like the Winklevi, the complete blue. Like they got Bitcoin early, just like Chamath or whoever, but they didn't actually understand what was happening to Bitcoin. So they played the game and trying to get the ETF and trying to do it. And then they rugged themselves because they offered a burn product and they try to legitimize it. And they had all these financial advisors using them. And then they put all their clients' funds in Genesis. And now their financial advisors can't get their clients' funds. And everybody's supposed to be playing on the up and up. And to Tyler's point, at least like CZ was like, hey, trade 100x leverage, like, use a VPN. Like, yeah, of course it's sketchy, but you're getting rugged and you get rugged. And this is the most beautiful part about all of it. Nobody's ever not been able to take their Bitcoin off of Binance. And it just made me think of, it reminds me of, maybe say never. They haven't halted withdrawals.
And they've slowed the process down by like forcing you to redo KYC AML. So they're,
but mainly, like they have Bitcoin, like they at least to this exact point, they have Bitcoin, and it reminds me of BitMEX. Like BitMEX had, and this is the beauty of this ties into
BitMEX did it the right way.
Yeah, BitMEX did it the right way. 3 or 4 multi-sig, you needed 3 every day. They process withdrawals all the way to like Arthur being in handcuffs and one of the other guys like being in house arrest, and they could still process withdrawals. Like pure pirate, sure, maybe you shouldn't be trading, but they did what they said they were going to do.
Yeah,
it's a really good point of like there's legality and being a pirate, and there's also an element of like entrepreneurial hustle and like building a business through offering things that people are want in terms of products, and like Arthur and CZ have done that exceptionally well. So there's legality, there's entrepreneurial hustle, and then there's deception, which I think you guys are right that Coinbase has subtly been the worst of the bunch, like in terms of deceiving people and misleading people into believing they are the trustworthy source of information and a reliable, trustworthy place to come in and get exposure to this new asset class, when in reality they're no different, because they make their money by people chasing altcoins, because the more you trade, the more trading commission Coinbase and all of these other companies get. And you guys are right that Coinbase was deceptive in what they did in terms of trying to encourage that. When you've got Brian Armstrong, I found the tweet, so it's one of those unbelievable tweets that is worth articulating very.
Put it in the Slack precisely, so we can throw it up.
Okay. Here, Pierre tweeted it out yesterday, so I will put it in the Slack here. Hold on. But this is from 2015. This is February 2015, and in Brian Armstrong's mind, it was clear. It was already clear that who's the winner here? It is Bitcoin, and that's dead. Over and done, and we should focus on Bitcoin. So I sent it to the Slack, and here's the quote of, this is Brian Armstrong tweeting in February 2015, Ripple, Stellar, and altcoins are all a distraction. Bitcoin is way too far ahead. we should be focused on Bitcoin and sidechains. And, I feel like so often when we're complaining about Coinbase as Bitcoiners, people say, oh, those are just the salty Bitcoiners. Like, oh, they wish that people hadn't moved on to the more exciting altcoins that are out there. And, they want the focus to still be on Bitcoin. But then you see a tweet like this from Brian Armstrong in 2015. He got it. He understood. There was a reason why he was early. It was because he worked in Argentina for a little bit. And so he had experience with, seeing how that society had been terribly damaged by inflation. And therefore the value proposition of Bitcoin jumped out at him. We all have some reason or some mixture of reasons why Bitcoin makes sense to us. And so if you're in Bitcoin right now, you are early, and there's some combination of factors from your life that has resulted in Bitcoin making sense to you before 99% of the world. And that was true for Brian Armstrong because he had this visceral firsthand experience of seeing the damage of inflation. So he got Bitcoin, and he was excited about Bitcoin enough to leave his job and start a company selling Bitcoin to people. But then the profit motive of it's great when we sell Bitcoin to people one time and we take a 2% cut, which is what they take. They take a 2% fee every time you do anything on Coinbase. It's great when we take a 2% fee one time selling people Bitcoin, but it's even better if we can get people to buy that Bitcoin, take the 2% fee, and then encourage them to explore what else is out there, because there's so much exciting innovation. And you might want to hold some Ripple. You might want to have some Litecoin. And every time people jump around between these different assets, we take a 2% cut. And that profit motive crept in and changed Brian Armstrong from being someone who was a Bitcoin enthusiast who was trying to help people get exposure to Bitcoin in a regulatory compliant way, and frankly a great user interface with Coinbase, and that warped into like all these platforms, a crypto casino where they make money when you stay at the table. And so, yeah, you guys are right that Coinbase deceived on a different level than BitMEX or Binance did. I do think there is kind of a spectrum of the potential degree of illegality of activities between FTX at the far extreme, because there was literally a $10 billion fraud that they perpetrated, and on the other side is Coinbase, who I think has been trying to do things within what's legally allowable, because they are kind of the Silicon Valley version of a crypto casino. But of course, they've been deceptive in terms of what they've been marketing. And in the middle there is Binance, who has been that, you kind of admire the Buccaneer spirit and the entrepreneurial chops. It's unbelievable what CZ has built, but very much in a legal gray area and trading against their own. It appears that they've been heavily trading against their own customers, which is not cool, but it is not a $10 billion Ponzi scheme like FTX did.
Yeah, and we're talking a lot in the context of Coinbase of it being the Silicon Valley darling, and being one of those darlings in Silicon Valley comes with a lot of pressure from the capital providers backing you in the venture space. And I guess this is a good segue into the thread that you wrote that we mentioned earlier, Tyler, about Silicon Valley not being able to grok Bitcoin. And obviously, Jesse, you wrote your inability, the yuppies' inability to grok Bitcoin a few years ago. That turns 3 in August. But Tyler, I think, is a good time to really turn to, like, all right, there's Coinbase particularly, they're definitely getting a lot of pressure from their backers saying, hey, look at all this out here. Like, why are you focused on Bitcoin only? Like, you need to add all these coins. Like, what is missing, what connection is missing for your typical Silicon Valley venture capitalist or entrepreneur to really grok Bitcoin and what's going on here?
Yeah, I definitely recommend listeners go check out Jesse's article about the yuppie elite misunderstanding or failing to grok Bitcoin as well. Puts a lot more eloquently what I was trying to convey in my Twitter thread is that I think it's all deeply rooted in just trust in the system at the end of the day. But that thread was inspired by a Memorial Day weekend that I spent with some close family members up in the Midwest, and my uncle's great guy, really smart. Kind of a beneficiary of Silicon Valley's success over the past 20 years. And as brilliant of a guy as I think he is, whenever we engage in conversations about Bitcoin, it just doesn't, inspire him as much as if I were to use, the D word, democratize finance with a DAO or some, crap like that. That's what would get his attention instead of talking about, the most powerful money that the world's ever seen in Bitcoin. And so it's like, I wrote the thread kind of thinking like, what are the top 3 reasons why folks like my uncle, ironically named Uncle Sam, right? Which I thought was kind of interesting, given that the third point in my thread is politics in America. But the 3 reasons that I boiled it down to was one, Bitcoin doesn't have this wonderkin founder type that it's so much different than your average Airbnb or classic Silicon Valley darling child unicorn. There's no team, right? It's this open source ethos with cypherpunks and it's open source code. And so that's kind of one thing. There's no Paul Graham mentoring a Y Combinator Bitcoin project, right? Then for the second reason was, it's just apathy, right? If you are a Silicon Valley elite and you have a cushy paycheck and you really don't need to think deeply about protecting yourself from inflation or how Argentinians should be able to save their hard-earned savings in a currency that's not perpetually devalued. If you just don't have to face these problems, then it becomes less of an issue for you. So apathy, there's no founder, and then of course politics in America, right? Silicon Valley is the bluest of the blue. And when you're reading the New York Times every day, and this again ties back to Marty's episode with Balaji, it's like if you are being fed this information every day and all of a sudden it's not just food blogs or travel blogs, it's like constantly jamming information down your throat about Bitcoin, where these authors at the New York Times don't actually do their own research. They don't put boots on the ground. They just kind of write about what they think about. Well, you combine all that together and it's just this stew of complete misunderstanding. But then you look at the Coinbase, kind of the Bitcoin, kind of the Bitcoin presence in Silicon Valley is Coinbase. And I think the deception we were talking about goes a layer deeper, because as soon as you're Coinbase and you start introducing altcoins, because you have that profit motive now, you are inspiring these Stanford graduates in 2017 and 2018, these brilliant engineers, to work on what's, a project that's going to get hopefully listed on Coinbase, right? It's like you are completely altering and dismantling the incentive base of these kind of bright minds in Silicon Valley and just poisoning them from the beginning. So whether their intent is malicious or not doesn't matter. Coinbase set the precedent that, hey, you can buy and sell crypto assets, and there's DAOs, and we're democratizing finance. And while it might be on the surface of it a really lofty goal and something that a young entrepreneur would want to inspire to, really they should be focused on building on Bitcoin and learning the Lightning Network and writing Bitcoin wallet software and contributing to open source. And all of this stuff was put by the wayside because of kind of this profit motive that was thrown in the face of Brian Armstrong and the team. So don't want to go on too much of a diatribe there, but yeah.
Yeah, and to piggyback on where Jesse was coming from on Coinbase and some of the just not manipulation, but just kind of misdirection, and then what Tyler just referenced, we're not just speaking ideologically, because I think it's important in the framing, in the sense of it is from a practical, long-term, low time preference. If you're looking to build something sustainable, the focus on Bitcoin, going deep, going narrow. You think about what Unchained's done, River, firms that are looking to build things the right way. there's so much of an attack surface from a security perspective, from the tooling, from the things that needed to be developed. The only way to really do it properly and do it right, that's long standing, from all the way from the people that you hire all the way to the tech, is to have a singular focus and then the products around it. And it may not come at the exact speeds of a BlockFi or a Coinbase or others like an FTX or Binance, but at the same time, it all exists on a spectrum, and at some point, the rubber hits the road where the SEC comes knocking, or the firm blows up because you're trying to grow your top line revenue, so you're not stop lossing on risk management, and now you're bankrupt. So there's this real like practicality, and that's where like I think the big the Silicon Valley, and this goes to again the gray, blue, and red. It's like there's this world of the Silicon Valley or the coastal elite. They're not worried about money, like that from the core sense of like their own money, like a Latin American country or emerging market that has bad money. So that's not the angle. The other angle, so the angle they come at is from either the tech or how to make more money, how to make the riches. And so Bitcoin, well, it's already late. How do you do that if you're not building a company around it? So it's like, okay, and you see to Tyler's point, firms work for Coinbase, and this is like the next thing, which is the whole idea. It's the next thing, whether it's like AI or crypto, whatever it is. Like that is the mindset, and not actually understanding what's happening. And so like the Amjads of the world, I have a lot of respect for somebody like that because he lives in that world, but he also is an independent thinker, and he's come to it on his own side. He has a unicorn company he's building in this space or outside of Bitcoin, but he understands the gravity and what's happening with Bitcoin. So he's looking to bring that into his firm. So he's using the mindset of first principles, growth within reason, building a sustainable business, and also understanding where Bitcoin's going. And so I think we'll see more of that. And that's one of the most exciting things, at least on my side for like the next decade, is that mindset of understanding, like thinking independently along with building sustainable business is, I think will be very interesting.
Yeah. And I mean, and this goes back to the perverse incentives. And that's, I think we should feel, we don't have to feel for Coinbase, but like a lot of these perverse incentives are sort of seeded by the capital behind these companies. So like the Silicon Valley VCs, the A16Zs of the world, the Sequoias, Paradigm, whoever it may be, like like we discussed earlier, the ability to deploy capital and get a liquidity event in 12 to 18 months with a 10 to 1,000x is extremely appealing to the venture capitalists out there. They're able to get these quick returns, return money to LPs at significant multiples, and it's great for them. And the LPs probably love it, and they've probably been making a lot of money. But in the long run, like we're seeing, nothing has staying power. And so then the moral question leaks in, like, is this a good way to make your riches? And then on top of that, the incentives it provides for the companies, and this is why 1031 exists, is we've recognized that sort of disconnect in the market where there's a lot of companies that would like to build on Bitcoin only and would like to focus on Bitcoin, have that narrow, deep understanding and stack like the Rivers, the Unchains of the world. The mining companies that exist out there, they're really focused on Bitcoin. There's many teams like them out there that would like to do that, but cannot get the capital because the capital comes attached with strings, which are you need to offer these other tokens that are going to provide revenue for you. And so luckily over the last 3 years, particularly, that trend is beginning to change. We've raised a lot of capital and deployed a lot of capital at 1031. There's other funds like Ego Death that have risen. We got Trammell, we got TVB, Stillmark. There's a lot of Bitcoin-focused venture funds that are coming and raising a good amount of capital and going to the founders saying, hey, we're not going to attach those strings to this capital. We get Bitcoin, focus on it, build out the ecosystem. And that is why we call our funds low time preference funds at 1031, because we do believe that this is going to take time. But it's like a marshmallow test. You're going to eat the marshmallow now, like a bunch of the Silicon Valley VCs have done with their quick exit liquidity, or you're going to wait for 20 marshmallows down the road when the companies that you're investing in have built out a solid foundation and layered stack on top of the Bitcoin network that is going to drive a lot of value for those companies and humanity more broadly.
Yeah, you made me You know, you think of channel my inner Marty. It was like these people hate you. I don't know if it's that far, but that's what made me think of like Fred Hersham. So you mentioned Paradigm. Fred, when they went public, he sold $2.1 billion worth of shares at the top. And then recently, obviously, Paradigm, pivoted to crypto / AI or whatever the term is, like the next thing. And because those that's as close as being inside as you're going to be to know that, like, okay, this is hammer's coming, and we have a lot of dollars to deploy, so we got to figure out what the next thing is. So yeah, sorry guys.
Yeah, I want to build on something Tyler said there of like Coinbase really created this incentive for like Stanford young engineers to get completely on the wrong track from the get-go, and has diverted so much human capital and energy and potential building away from Bitcoin or other productive things and into the next altcoin pump and dump. But that makes sense because, like, when you think about the cantillon effect of when we're printing money, the people that benefit the most are the people who are closest to the money printer, the financiers. So the cantillon effect is money printing, quote, financing the financiers, and that means, whether that's direct stimulus of creating money at the federal level or whoever has access to loans and M2 created through commercial bank lending, that is who can get the most juice out of a monetary expansion trend. And the people in the world who have benefited the most from that have been Silicon Valley venture capitalists. It's just that they are at the most extreme end of that effect, because they're taking on, they're getting all this money pumped into them from the big pension funds and endowments and whoever's trying to get some extra returns in their portfolio, and then they're pumping that into the next technology startup that they think can grow rapidly with leverage, and that's the whole model, and the venture capitalists get to benefit from that immensely. And so it's no surprise that Coinbase comes from that world, is part of that world, is a great enabler and fuel for that cycle of the cantillon effect coming to crypto, and finding a home in crypto. Let's print the next type of money, and we'll keep 20% of it, and we'll hype it up with all of our accumulated power in Silicon Valley and all of the connections we have, and we'll dump it at the top. And rinse and repeat. And A16Z has done awfully well with that formula. And Chris Dixon is, in my opinion, one of the worst actors in the space as a result of that incentive and the money that he has been able to make by playing that playbook. We have to remember that Silicon Valley is not just an outcome of technology. It is an outcome of fiat money too. And those things have converged to create some great products and benefited the world in big ways. But it can also misfire. And that misfire is when there's this sort of incentive that is in the wheelhouse of what venture capitalists like to do and see. And it just happens to be at the expense of everyone who falls for the marketing of what's the next Bitcoin. So Coinbase is kind of the public enemy number one, despite the fact that they have, in my opinion, been the least criminal in their activities. They have been the most deceptive and the most plugged into that Silicon Valley ethos that is all about let's find let's juice returns, because it's a formula that is possible in the fiat era, and Bitcoin flies against that. And so, part of what was hard about coming to Bitcoin for me was I went to Stanford and got steeped in that whole ethos of innovation and leverage and, everything about Sand Hill Road, where all those venture capital firms are located. And Bitcoin is the opposite of that. It is low time preference. It is savings rather than leverage. And it is not about innovation. Instead, it is about better money. And that is outside of the paradigm of what Silicon Valley thinks about, because you don't ever conceive of the possibility that there could be better money. Nobody ever talks about that, and nobody really understands money. So you're not even asking the right question of what is money and what makes good money. So I think that it's interesting to consider that Coinbase has been a great source of evil in poisoning the direction of Silicon Valley and so many entrepreneurs that could have been building on Bitcoin, and instead are going through a painful journey and will eventually find their way to Bitcoin the hard way, the way most people do.
Yeah, I like to say what venture cantillonism is, probably more accurate description than venture capitalism, right? It's like
Perfect.
printing,
Yeah.
Printing money does not produce value. And it's just, and printing money means printing tokens does not produce value. It's all the same thing.
Yeah, I think that ties to the saying of like constraints breed creativity. Because if you think about it, it shouldn't be forward. It's just like there's real world opportunity cost to capital. And we talked about this, I think, on the first episode. And it's what like Jesse's alluding to. There's like it's not a secret. It's what's known. Like when SoftBank wanted to invest in a firm, they would go to them and they would go, and some people would take it and others wouldn't. And before they wouldn't take it, they'd say, well, hey, if you don't, I'm going to point the money cannon at the other company. And they recognize that, like, if it was basically existential, because if they got that capital, then they were able to grow faster. And so it's a reality of the game that's been there, but it's also a reality of, we understand, and Jesse knows better and can talk to it better than anybody, is like the math doesn't add up. And so the dollars at a certain point will end, the Bitcoin will exist. And when you want to build a business, there's real opportunity cost in there. And in my background, where I really went down the rabbit hole is at WeWork, and I was reading the Bitcoin Standard while realizing we were living the Bitcoin Standard in the sense of misallocation of capital and building buildings that were never going to be, finished, which we did exactly that. There's still buildings all over the world that never were completed, let alone people said, got office space in. And it's not to say that it wasn't a good business or a productive business, because it was. It just was, and the multiple was not what it was from a venture perspective. And so there'll be real opportunity cost for somebody to give you their Bitcoin to take an equity stake, and they'll just look fundamentally different. And I think it's in the best interest of everybody to understand that sooner than later, especially on an entrepreneurial perspective, because when that's recognized, then you start to look at the world in a different lens of like, well, what am I using my time? How am I thinking about growth strategy? Because that world will come sooner than later. And even if it was just a dollar world for the next 10 years, it still makes sense, because on the back end of it, you end up with a zombie company like we've seen once the cost of capital, increases. But it will happen. Bitcoin will be money, and that whole world will change. And this is like part of these discussions, are to start thinking about that, or at least something gets sparked where you start going down that rabbit hole, because nothing that we're saying, or specifically this is forward. This is just how things were when we had a form of money that could not be printed. We've just been so far removed from that, and we grew up, with a dollar that has really relatively little meaning. And so this is the state of affairs that we're in right now.
Yeah. And so to tie up the topic of the SEC's enforcement or their complaints against Binance and Coinbase, let's go around the horn. What do you guys think is going to happen? What is the outcome of this? Binance and Coinbase pay a fine, go about their way.
I saw an interesting observation that it was in a way, it's a little unwise who the SEC decided to go up against, because the legal teams for these two companies have got to be the best in crypto. And they're going up against the SEC litigators who are not known for being the best litigators in town. So it's a little bit of a David and Goliath situation in the way that you wouldn't expect, because Coinbase is going to be stacked, on their legal side. So I think that the SEC, I think they have a case, and they will extract some sort of concessions or victories. But I wouldn't be surprised if Coinbase successfully stands their ground in the big categories. And when it comes to Binance, that's a much more complicated case, because like the biggest crime that Coinbase has committed, as far as I can tell, is allowing customers to purchase securities that are staking, and providing yield, and that pretty clearly runs against the Howey test. Whereas Binance has done potentially quite a few shady things. So I don't know what the outcomes will be. I think that it won't be as clear cut of a victory for the SEC as it appears it should be. And I do think that an outcome here is, you end up with another FTX, another offshore company that is finding a way to serve U.S. citizens illegally, and that this problem just continues, because you can't really stop that as quickly as you can stop Coinbase from doing it, because they're domiciled in the U.S.
Tyler?
Yeah, I would kind of, I would think that while there's not a clear-cut win for the SEC or the exchanges in this case, I would say, potential outcome could be Binance US gets maybe obliterated, and the SEC chalks it up as a huge win. But I do think, given the entrepreneurial spirit of CZ and kind of what we were talking about, it's like, it'll be another Phoenix. It'll exist somewhere. On the Coinbase side of things, I do kind of think that, as much as I would hate to see, a commemorative NFT be the way that, they propose to fight these battles, I think the point about having a strong legal team is there. There's arguments that, they were allowed to go public. And so there's it's going to be a long drawn out battle. So at the end of the day, I do think Coinbase will still be around. Stock price might tank. Hopefully there's a little bit more disclaimers they have to throw on their website, instead of just labeling themselves as a place of trust. But this should be, we as Bitcoiners should be looking at all these events as not let's sit back and grab the popcorn and watch what happens. We should be okay, let's double down on education efforts and try to help the people who currently have funds on Coinbase and Binance, right? There's nothing that comes close to holding your own keys, and that should be paramount. So that's what I'll continue to do. This I know everybody on this call is going to continue to do, and we're going to win.
Yeah, I think that's exactly right. I think the term that came to, or this phrase that came to mind, is that the trap has been set. The theme within the Wall Street circles, and it may be public, I don't know if you guys have heard, it's everybody's on the STO, or it used to be called an STO. I don't know, what is it called now? It was a security token offering or whatever. And it's now it's tokenizing, whatever. So we got that's coming. We got probably, so there's that. I think about regulation around all these quote unquote DeFi protocols, so Uniswap or any of these things that they're going to, just set the stage between that, the STO, and then CBDCs. We're seeing with Jeremy Allaire and Circle that it's going to be the, hey, bend the knee. We don't want to stifle innovation. So let's work within the framework that we establish. Everybody's oh, thank you. We're appreciative, because at the end of the day, I think the thing that and probably all of us don't fully grasp is we're so far, and this is the purpose of the show, is so far on one side of understanding what's happening that it still seems foreign or insane that all this stuff can actually be zeros, just complete zeros. Not, we use hedge and say 99% or securities. They're all securities. They're all created by somebody. If nothing else wasn't created by an individual and can be changed, the monetary policy. And so I think between you get the regulation or the framework around it, forget about what CZ does. Let's think about the United States, because he's just going to be a pirate and do whatever he does. So you get STOs and like, okay, well, we know there's innovation around securities and token offering and whatever they make up there. We get DeFi because DeFi makes sense and it's innovative, but we're going to regulate that. And then CBDCs, and we're going to get capital just go into droves. But the reality is, we all know that with a click of a button, all of that gets stuck there. And so the point of all this is, we discuss Bitcoin. We help people take the Bitcoin off of the exchanges, the possession, or reduce the counterparty risk. And I think that's where it ends up. Nothing goes away. It just evolves.
Yeah, I think big fines will be paid. Binance will get kicked out of the U.S. and everything will persist, but with more regulatory scrutiny and strings attached from DC. And I mean, that's another big question. Bitcoiners, like you said, Tyler, I don't think we should be sitting here with popcorn in our laps, even though we've been predicting this and telling the people in crypto, like, hey, they're going to come down on you. I don't agree with the SEC. I don't think it should exist. I don't agree with the securities laws, but they do exist, and the SEC does exist, and what you're doing is going to draw their ire. That has happened. We've been vindicated. But with that being said, I don't think they stop at crypto. Like, I don't think they like Bitcoin. They really don't like Bitcoin because Bitcoin is the one they truly can't control, and it's truly out of their grasp of control. And so while many Bitcoiners are sitting around rah rah, like, told you so, haha, like, have fun staying poor. Like, no, like, this is going to be used as a precedent where everything gets hyper regulated and becomes very sanitized and sterile in the crypto world. And then they draw their ire at Bitcoin. And we had a glimpse of this with Gary Gensler's comments earlier this week when he said, we already have digital currencies. We have digital dollars. We have digital euros. We don't need another digital currency. And while he didn't name Bitcoin specifically, I think that was like a canary in the coal mine of them setting up for the dollar is the digital currency that we have. We don't need Bitcoin. And so I think this is just setting the stage for protecting or posturing like they're protecting retail from penny stocks in crypto. And then once that's done, all right, focus on Bitcoin. This is a digital currency that does not fall into what we believe should be a digital currency.
One thing you said, Marty, that we've been talking about, and we chatted with Larry, it's like, I think more, and you're going to get killed for this, is we should be aligning with gold a lot more than we are. Like, if you think about, what was the Texas thing of no like infringement, or like, it was something about Bitcoin that recently came out in a positive light. But I anchor back to 2014 when Kyle Bass brought Utimco's gold bullion down to Texas from New York and had it set up basically like a sovereign Texan depository where the gold sits segregated. They can view it. And you think of like aligning with what you're referencing. If you can play in the crypto world, or you can play with the thing that has been recognized and has been established, from whether it's being held as an individual or being held within, a sovereign or nation state. I think there's something there that will offer some like protection in the sense of like, hey, this is gold, but it has the ability to be transferred more seamless. So anyway, that was just something that came to mind of like, as that happens more and more, there's some coverage there that I think we should play into.
I agree. I like our gold bugs. Our gold bugs. We align philosophically on many things. We just need to get them over a couple humps.
Agreed. And I think to that point, Michael, I think we're in a bit of a race against time here, because regulators are, as Marty was very rightly pointing out, like, there's an order of operations here before they can really circle the wagons and come after Bitcoin. Meanwhile, TikTok next block, like, Bitcoin keeps doing its thing. The next halving is coming. The adoption curve keeps going. We keep getting more powerful people on board to, the value proposition of Bitcoin, whether that's people in Congress, presidential candidates, heads of energy companies who are looking to monetize their stranded natural gas or other resources. And the more we can capture the minds of those people, like, plant the value proposition of Bitcoin these mines, the more formidable of an intransigent minority the Bitcoin community becomes, advocating for what Bitcoin is, which is freedom of speech and property rights. Like that's all it is at its core. And the gold bugs are on that same wavelength and should be allies for us. And we're in this race against time of like, if we can get just a little bit further into the adoption curve, such that, right now we have RFK Jr. And Ted Cruz saying that Bitcoin is a good thing. And they are realistically fringe personas in the national political arena. Can we get a little bit further towards the mainstream before the SEC and other regulators have time to really attack Bitcoin? They have a few years before, if they were to focus just on cleaning house and crypto, it would take them a few years to do that from this point in time. So, we have a few years of runway to try to onboard as many people as possible to the value proposition of Bitcoin and hard money in general. That includes gold. So hopefully we can run fast enough, hard enough, for long enough here to build the coalition we need to defend freedom of speech and property rights with Bitcoin and with gold before the CBDCs come down hard.
Yeah. There was one more topic I wanted to touch on, Tyler, unless you have anything to add to that. I know we're going.
No, that was definitely. I agree with both those framings. I think also the episode that you guys did with Lawrence Lepard was awesome. We do need to align ourselves maybe with, or I guess start to educate and then take on the gold bugs just with open arms, I believe.
Yeah, come here, gold bugs. Give us a big hug. We love you. Philosophically aligned. No, but the other thing, I know big week with the SEC coming after Binance and Coinbase, something that's been choreographed by the SEC and predicted by many Bitcoiners for many years. So the fact that it happened this week, it makes sense that we would spend a lion's share of this episode talking about that. But another thing, which I do want to talk about, particularly since you're here, Tyler, is the rumors that started last night. David Bailey sent out a text that there is a large crypto or Bitcoin custodian that is on the verge of bankruptcy, potentially happening end of market tomorrow if things don't get solved. It's terribly kept secret that it's likely Prime Trust, which is a custodian that a lot of services leverage. Swan Bitcoin used to. They've since transitioned off to Fortress Trust, which ironically was founded by the founder of Prime Trust. He left and started this. Strike has had reliance on Prime Trust Fold as well. They've all since moved off, but you still have Binance US, and this is probably what's causing the problems at Prime Trust this week, I would imagine. It's Binance US, OKX, and a few others are still leveraging Prime Trust, and it seems like they could be in a precarious situation. They hold both Bitcoin and dollar balances for customers, or a mixture, or one or the other for particular customers. And if they go down, there could be even more tremors in the industry to end the week. And I think this highlights why Unchained and OnRamp exist, is because the rumors are that they may not be whole on the Bitcoin they're supposed to be holding, which is something that can be solved with Bitcoin's native multi-sig properties. So I guess just throw it out to the group. What have you guys been hearing? What do you think the significance of Prime Trust going down would be?
Just a little context to before I think Tyler has some stuff to weigh in on here. So on Binance right now, Bitcoin is trading at $2,000 more than everywhere else. So there's a $2,000 premium on Binance for Bitcoin, and that suggests that insiders, it's not that Bitcoin is worth more, it's that insiders believe that the dollars in that ecosystem, in the Binance world, are worth less. Meaning, that there's a risk that those dollars aren't there, and so dollars on Binance are trading at a discount effectively. So that's the scale and the realness of these rumors. Insiders believe there's something to it, enough to create a almost 10% delta in Bitcoin's price on one exchange versus all the others.
Yeah, I think it's like Parker used to talk about this a lot, and still does, like this concept of extreme ownership in Bitcoin. And that extreme ownership, of course, is levied on the individual when it comes to extreme ownership over your wealth, right? Over your portion of 21 million, you should hold the keys. When you're thinking about building a Bitcoin business, I think that extreme ownership needs to also be something that's taken quite seriously. And I think this is, a really big warning sign to individuals running these businesses. If you're running a Bitcoin business, in-house is going to be the way to go. If you're going to offer a trading desk, if you're going to, if you're going to build something as quality as the likes of, River, Unchained, OnRamp, you have these Bitcoin-only businesses. While it is a low time preference method about going about building, it's at the end of the day crucial, and it might be the sole reason you remain alive. Right, hopping from kind of one back end to another is certainly one way to go, and that might be out of necessity for a lot of folks. Right, it's like hard to grow a startup or a young company, but I do think this is like a warning sign right now, where it's, hey, where there's smoke, there's fire, and there's going to be another fire down the road at some point. It's inevitable. So taking the right steps now and taking extreme ownership now is going to be the best way to go. So it's like we work with clients day in and day out that are moving Bitcoin to their own funds. They ask about this stuff. And this is also the really interesting just mental analogy. I think I've talked about it with you, Marty, before. It's like, you look at Bitcoin held on exchanges, and if it's, let's say Coinbase, right? Not related to Prime Trust, but even if it's Prime Trust, even if it's Bitcoin held on Prime Trust, like they could be securing hundreds of millions or billions of dollars worth of Bitcoin with a handful of keys. Where you look at the client base of somebody like Unchained, they're holding their Bitcoin with thousands of keys, right? I tell my clients all the time when I'm working with them, it's just kind of how people talk. They'll say, so when I send my Bitcoin over to you guys, and I have to pause and say, hey, so like that's kind of an incorrect framing. You're not depositing your Bitcoin with us, right? You are holding the keys to your own Bitcoin. We're just a collaborative partner in that. And so being loud and educating about that is still really, really important. But yeah, however the chips fall, whether it's Prime Trust or some other entity that for some reason we haven't speculated correctly about, I do think it's like an important and good, healthy warning to Bitcoin companies in the space that the extreme ownership, low time preference building is the way to go.
Yeah, and another way to say extreme ownership, particularly in Bitcoin, which is the phrase popularized by Nick Szabo, which is trusted third parties are security holes. And so in the case of Prime Trust, it's the third party that's leveraged by many other actors in the space. And those actors are putting a lot of trust in Prime Trust to actually do what they say they can do. And we inevitably, with a lot of these trusted third parties, get to a point where they can't do what they say they can do. And that trust that you gave them comes back to bite you in the ass, because you are not afforded the services they say they were going to give you, which is custodying Bitcoin, facilitating the buy and sell of Bitcoin, facilitating US dollar transfers. It seems like many people that are trusting Prime Trust are going to learn that hard lesson. Rumors at this point should clarify that. These are just rumors that are going around on Twitter. We will find out if there's any validity behind them, but it seems like there may be at this point. But again, like Tyler just mentioned, like Bitcoin provides you this beautiful ability to take possession of your asset, of the UTXOs that you hold. And not only that, it has this other beautiful property that you can do it in a way that distributes risk among multiple keys. In the Unchained model, the user has 2 keys, Unchained has 1. Like Tyler said, collaborative custody. It's a 2 or 3 multi-sig. If you ever need to move your Bitcoin and you have one key and the other's somewhere else, but you really need to move it, you sign one key and Unchained's there to sign the other. On-ramp, like this is why you guys exist too. So like Unchained's probably deeper down the funnel than what you guys are offering, but still, even at the trust in the financial asset or the structure definition of the word, like this is a much better model than the grayscales of the world, where yes, the individual may not have a key in the quorum, but you distribute that key risk among different institutions, which reduces the third party risk that exists.
Yeah, I think the core thing is like decentralization is not an ideology. It is game theoretical, the best game, like the best setup. And you think about I always talk about this. We talk about like the decentralization of hash rate and why it's important to the network. But as Tyler alluded to, the decentralization of keys are just as important. And we've seen this play out. We know what happened with gold and the centralization. And so you think about it from somebody that's coming into Bitcoin and just thinking about just from a long-term perspective, if Bitcoin is to be successful, you want those keys spread out as far into the network. Simply from a perspective, if you are going to challenge money, there's a number of reasons why you don't want it sitting at a honeypot and sitting on a certain exchange. And then on the other side of that, on owning the private keys, it's a spectrum, as Marty alluded to, where different individuals come at it from different extreme ownership and what they're willing. And that was part of the, sitting in Tyler's shoes very early on and helping onboard individuals. And something that always resonated or kept in my mind was the higher the net worth the individual, and this is just a fact, this is just reality, the more money the person had, the more angry or annoyed that they were asked or tasked with holding cryptographic material. It's not to say that they never will or they won't. Some did it begrudgingly and some said like, screw it, I'm not going to do it. And those people potentially may not have their Bitcoin anymore because they left it on centralized exchanges. And so that's really the idea. It's like, what are the ways that we can help meet people, whether it's on chain, on-ramp, or other products, to onboard, make it seamless, decentralized, get those keys out and not have a single point of failure. And then ultimately, as information, as the market shakes out, you can find other ways to essentially hold your asset. I used to have the view that there was like one right way to hold Bitcoin, and I don't actually have that anymore. I think it's just always moving all the time, depending on your risk profile, your amount of Bitcoin, the status of the world. And at some point, I hold all my keys right now, but at a certain point, if we're really well known and the price of Bitcoin is 10 to 1,000x what it is, I don't necessarily know if I want it to be known that I can always move my Bitcoin unilaterally, having kids and things like that. So I think it's a constantly moving target with the core principle. You don't want a single point of failure, and you want those keys as far out into the network.
Yeah, and more broadly speaking, like I tweeted this out last night, like I think on the other side of this hill, if the rumors around Prime Trust are true, for the type of service that they're providing, like multi-institution, multi-sig should be the standard moving forward. Because the way multi-institution, like in a financial product, let's use Unchained's lending desk, for an example. It's a multi-institution, 2 or 3 multi-sig quorum, in which the borrower puts up Bitcoin as collateral in this multi-sig escrow wallet. They hold one key, the borrower does. Unchained holds a key, and then Kingdom Trust holds a third key. So in this agreement, me as a borrower, if I'm the individual borrowing, I get the confidence of knowing that Unchained can't unilaterally move my Bitcoin. They don't hold 2 keys. It's spread out between them and another institution. Similarly with on-ramp, if you invest in the on-ramp trust, on-ramp holds a key, Kingdom Trust holds a key, BitGo holds a key. Like, that's distributed among 3 institutions. They have to collude to move your Bitcoin, which is unlikely given the fact that they want to uphold the reputations of good stewards of the keys that they hold and sign on behalf of individuals. And so it really acts as a forcing function for individual companies and services offering Bitcoin products to act correctly. Like you literally cannot misallocate the funds because you would need to collaborate with another institution to do so. And the likelihood of them being willing to sort of erode their reputation because you want to do something with customer Bitcoin is lower.
Yeah,
I think
especially because
that,
yeah, go on.
okay.
Well, I was just going to add that it's especially true when these parties involved are qualified custodian companies, and their entire reputation is based on being responsible stewards for client assets, and they're not about to risk that to participate in some kind of collusion.
Yeah, I think the two things I would say is like there's a lot of things we've said that are theoreticals and that people that are closer to the space will agree with or have come to those conclusions. The one that is not theoretical, it is practical, and it is the state of the market is Unchained has never lost a loan. They had a form of custody that what Marty just talked about, and as the market and all the leverage and all the things happened, they could not rehypothecate, they could not move client funds. And so when we talk about, multi-party custody and the way you want to distribute keys and why it is practical from a sense for folks, whether it's on collaborative custody and holding one key or two, whatever the setup is, there's this reality that it provides assurances that don't exist in the old world of whether it's crypto or just traditional financial services. And to Jesse's point, this is the market structure now, but it's our view that as this gets incepted into the market, on the next run up, people will look for firms that provide services like this because they understand that education gets disseminated in the market. They realize that they do not want to leave their Bitcoin, their precious Bitcoin, on a single exchange. And over time, right now it's Bitcoin companies or Bitcoin adjacent companies, but you can imagine a world where a firm holds a key that their balance sheet is completely different and tied economically, and like from their productivity, their pure revenue is tied to whether it's financial services or some other offering, but they hold the key. And so just from a pure game theory, they're not incentivized to move the assets or collude because that is something that obviously comes up. And the common answer to that is, well, there's no perfect solutions. There's just trade-offs. And that's really the reality. It's like very often early on Chain, folks would say, well, what you can collude with Kingdom Trust, or at the time it was Citadel, to move the funds. And it's like, well, sure, you can, but your whole enterprise value would go to zero, all the things that would happen along with that. And if you're assuming that, well, you've already taken the step that BlockFi would have already done that, which they have to be doing that. So I think over time we'll find more key partners will grow. They'll realize they want to step in and be a part of the Bitcoin ecosystem. And it's a very low hanging, easy way to participate, build trust, and just build a more like resilient, redundant part of the network.
Yeah.
I think an interesting backdrop too, to both on-ramp and Unchained, it's Bitcoin multi-sig, right? We don't have to worry about MPC, like multi-party computation or whatever might be behind something like a Fireblocks or something like that, because we're worried about other assets being secured in multi-sig, right? There was, I think, just an MPC bug exploited maybe a couple months ago. It's like we have Bitcoin multi-sig, it's a native Bitcoin property, and we're using that to that is what we're educating on, and that's what we're using to secure I think what is the best collateral ever, the best money ever, and like that cannot be overstated, I think. So it's like the native Bitcoin protocols, and then Michael nailed it exactly, like eliminating your single points of failure. At the end of the day, Prime Trust is a single point of failure, or whoever. If it's one source, one signature required to move funds into onto your Bitcoin address that you control, if there's only one counterparty that is a trusted third party, that is a security hole and a single point of failure.
Yeah, and it's really ironic, touching it back to what Jesse said earlier, when the Silicon Valley archetype, the Silicon Valley VC archetype looks at Bitcoin and says there's no innovation. Like, that's the ironic thing, because like something like this is incredibly innovative building like a new financial system on top of like the assurances that are provided with this multi-sig, multi-institution model are an innovation that anybody who really grokks what's going on here should notice immediately and intuitively. Like, this is a massive step function improvement in the security of financial assets, broadly speaking, not just in Bitcoin, like for the world.
Yeah,
the Silicon Valley VC is trying to find like innovation to add another level of cards on top of the house of cards that's built on sand. And they don't recognize when they see Bitcoin is laying a concrete foundation of a totally new separate house. that doesn't register for them as innovation because they're looking for the next tier of cards in what is a doomed construction project from the beginning.
Yeah, and the growth of what Jesse just referenced in building that base like foundation, Tyler keyed in on it. That it's very little. It's not necessarily talked about or known, but like the interoperability of MON in a multi-sig is basically infinitely scalable, not from like the number of MON, but from the trusted parties that can continue to grow with it. And so you can build a resilient, redundant base layer of custody with trusted parties as you're able to hold one of those keys, and anything else doesn't provide that. And that's like the dirty secret, because everybody leverages an MPC or like an HSM. Generally the main players are Fireblocks, Anchorage, and somewhat Ledger and some other firms. But the idea is they keep that closed system, so they can never go to another party and participate in that. And what's being built here, and we know others are building it, and that's the beauty, is like it's not competitive in the sense of I think of it like Strike and Lightspark. Strike had been playing this world of like enterprise grade liquidity and tooling around payments and everything that they're building on interchange. And Lightspark, if we're uninitiated, like, oh, that's very competitive, not playing. But the reality is you want multiple people playing in that field because we're playing for the biggest game. And so if others are there, it basically legitimizes and standardizes that you have a better form of a financial product, and then others can jump in. And again, when you're talking about all the money and all the assets, you want as many people participating, and you don't want to be sitting alone trying to do that. And that's where like adding additional key holders. Kingdom Trust was awesome to be early. Ryan's great. BitGo, and there's discussions that I think everybody's having for folks that would join a network like this. And as that continues to grow, you can imagine jurisdictions will also come into play across the world. And it just adds to the further robustness and attack surface that people are looking at to think about, well, maybe I want some keys held outside the United States.
I'll make the argument that Silicon Valley is intimidated by the level of innovation going on in Bitcoin. Because it's not just these innovative business models, it's also Miniscript and Frost with Taproot. There's so many like interesting things that can be built on top of Bitcoin. So it's like, it's just it's education. It's getting the word out there. It's inspiring these young, whether you're a product person or an engineer, like work on Bitcoin. The Austin scene, Nashville scene, Silicon Valley even could be maybe rescued, or I guess have a redemption arc. But there's so much innovation going on in Bitcoin, so that might be worthy of a tweet thread later.
I think Marty's going to rescue Philadelphia before Silicon Valley gets rescued.
Absolutely,
Philly. I'm coming back. I'm gonna save Philly at some point. Not that it needs. I'm not gonna act like I'm gonna save Philly at some point. It needs saving. Frankfurt. Can you say New York City too while you're at it? Because it looks like I've seen the picture. It looks like Mad Max. I think they're in a little trouble over there too. They're in a little trouble as well. Philly looks like that today. All the smoke has gone to Philly. But no, I mean, we need to build on the strong foundation, as Jesse said, and that's really the sad thing about the Silicon Valley. I think that's been sort of the overarching theme of this episode is the inability of the Binances, Coinbases, Silicon Valley VCs of the world to not eat the marshmallow and fall for the siren calls of crypto and the quick and fast gains that'll come. They're at the end of the day, those are very empty gains. You're scamming people. At the end of the day, yes, you're making your LPs rich. Yes, you're going public as a company. But at the end of the day, are you actually pushing the ball forward in terms of creating the new digital financial realm? I don't think so. I think the scoreboard would show that you've really rugged a lot of retail investors, made yourself and your investors rich with nothing to show for it at the end of the day. In all the cases, I mean, there's nothing there. It's very morally bankrupt, in my opinion. And Bitcoin, a lot of people think it's slow, dumb, stupid, expensive, but it is those things for a reason. And as we just mentioned, Bitcoin is extremely innovative when you factor in these native properties that allow you to build a strong foundation that can actually fix the structural problems that exist throughout our financial and banking system.
Perfectly said, Marty.
Excellent.
Michael, do you want to say something? I saw you jumping
Yeah,
in.
I was just going to say that, and also like the numbers just don't add up in the sense of all the crypto only exists when the money's sloshing. Like there's that chart with the venture for this year, but then the thing that most people like, and I don't know how they rationalize this, but like whether it's crypto or the users, once the liquidity dries, like once the market kind of does its thing in the cycle and everything's by Bitcoin's tailwind, like all the activity ends. It's all wash traded when you really like look at it. Like they try to make digital primitives on it, and there's just a token that's being traded. And then once it slows, but it was like when the money it doesn't add up, because to your point, Marty, like you're saying the innovation doesn't really like by definition there is no innovation, because the dollars, there's so many dollars that it's chasing these like crazy things that don't make any sense. And the second the dollars slow down because the cost of capital goes, everything just like comes to a screeching halt, and nobody's using any of the crap there that everybody's positing or saying that they're like changing the world and keep whatever they say about the global south and the currencies and whatever crap that like they're trying to push to further this like grift. It all just like comes to a screeching halt, and they're sitting there and there was no innovation, there was nothing done, a bunch of people lost a bunch of money. So yeah, the crypto, like to Jesse's I think point earlier, like the crypto just basically gave like the highest fidelity signal of the venture sloshing of money into the quickest way to dump on people and enrich an individual or a group of individuals.
It's been a fascinating conversation. Tyler, thank you for joining us this week. Any final thoughts before we wrap up here?
A lot of folks listening to this, like, if you haven't taken the move, just custody your Bitcoin or think about eliminating all single points of failure, like do it. Extreme ownership, extreme responsibility. It's like nobody can do it but you. Get up off the couch and go do it. There's so many great resources out there in terms of education. The blog at Unchained is excellent. We have some awesome team members that are just 50 feet away from me that write really best in class content. Just came out with the hodl caves too. You can see the spread of returns for Bitcoin hold periods. And I think that's really, really interesting. So go maybe make it a weekend of education. But no, this was awesome, you guys. I'm re-inspired to go back to my Silicon Valley relatives and have another conversation. So thank you.
You now have an episode to send them.
Yeah, exactly.
Jesse, Michael, anything?
No, yeah, I think, from the on-ramp perspective of, Tyler's right that eventually I think everyone should be aspiring to self-custody. Michael also talked about, there's scenarios where it might make sense for people to consider at least part or majority through an avenue where they can't unilaterally control their own coins for security purposes and social engineering purposes. But the aspiration should be towards self-custody. However, for a lot of people listening, they're Bitcoiners, they've taken self-custody or are ready to. But for a lot of people in your lives, they're not ready for Bitcoin because they're scared of how to handle this new asset in a secure way. And that's why we built OnRamp, to be a bridge for people to get into Bitcoin in a way where they know they have best-in-class security through multi-sig, multi-party vaults. But it allows them to keep open the option to take self-custody when they're ready. So there's a learning process involved in Bitcoin, and you don't want to get stuck in grayscale where you're not allowed to withdraw your Bitcoin. And you don't want to be leaving it on Coinbase because of the stuff that we're seeing play out in the market in real time. So for those people in your life who are ready for Bitcoin but are scared, we think that OnRamp helps lower that barrier to entry to get a position in Bitcoin and get started the right way, while allowing for eventually transitioning to self-custody with a platform like Unchained or whoever makes sense for that individual.
Yeah, that's actually a great point that I'll share and lead with. Is it's something we talked about in early days at Unchained and Parker. We go into meetings, that the referencing of Tyler of like holding those private keys, it makes something that's ephemeral to individuals that's just like up in the air
tangible, and that they see these hard keys, the private key lives on the device. They don't just get up and walk away. And so when they understand the mechanisms behind that, they can actually park real wealth, because our thought is that everybody wants exposure once they learn the best performing asset, the properties, but then they just shy away from it because they can't figure out the custody. And so whether it's holding a single key, multi-sig real 2 of 3, or saying, oh, I understand that these keys are segregated or like held by different institutions, they don't just get up and plug themselves in. And this is how I can feel confident in getting exposure. And then I can go down the rabbit hole and get educated and figure out what the best thing is. I think all of those unlock a lot of capital, because a lot of people are scared that what's going to happen at Binance, Coinbase, and FTX and BlockFi. So excited. And then I think a bunch of us are going to be in Nashville next week. So we'll see some folks there, and then whoever, whether it's Tyler or Marty or in the Commons office, go ping Parker. I think we got him, but tentatively slated next week. He's supposed to be in Nashville as well. So
you guys couldn't see it, but he was ducking down, looking through the window right here. I think he was very happy with the group we have today. Incredible group, Rip3 in the books. A lot of stuff's going on. This is where the signal is. Bitcoin is the signal. Don't listen to the people telling you that Bitcoin maximalist. Number one, they don't exist. There's no uniform group of Bitcoiners who agree on everything. It doesn't exist. It's a fiction of people's imagination. Read the receipts. We've been saying this stuff for years. Eliminate single points of failure. There's a lot of grift and morally dubious activity going on in crypto. We're here at The Last Trade to bring signal, to help you understand this. And hope you like this rip. We'll see you guys next week.